Welcome back to another video, guys. I did a lot of research on this, and I hope you guys enjoyed. We're going to talk about Fubo, Fubo, and we're going to go over what is Fubo for a couple minutes. We're going to go over the lawsuit and why it's a huge catalyst for the company, but why it's also hurting not only its share price, but its business in many ways. And then we're going to go over the financials and see the goods and bads. So let's get into it. First, streaming. What is Fubo? Fubo is an alternative to cable streaming platform with 96% of its viewers are focused on sports, and it has over 300 networks, live sports networks, news networks, and entertainment networks. So why invest in a streaming company? Streaming is growing. It hits 40% usage of TV for the first time, and you can see what the people are looking for. And I think it's a great place to invest in an industry that's only going to continue growing, and Fubo subscribers are growing. So if you look at Fubo, global mission to aggregate the best in TV, including premium sports, news, and entertainment content through a single app, Fubo TV. All right, so Fubo has been called by Forbes a force in the sports streaming and the best streaming service for sports. Afikai, I've never seen that word before. But all right, we can see some of the channels and we can see the pricing. You might have to stop the video to see the pricing. Oh, there we go, it stayed. So they have a bunch of channels that they bundles, and the average revenue per user is $84, which is up 10% year over year. Love to see it. And then that's pretty much Fubo. So let's get into the lawsuit. So in February, they launched the lawsuit, and that's when the share price started tanking. They're down about 25% since they launched the news of the lawsuit. So, and they have a court date set in August 7th. Today it's July 21st, so it's coming up. And also their earnings are coming up in 2 weeks. I believe August 2nd, their earnings are coming out. So there's some catalyst coming up, and the stock price is bound to move soon. So the lawsuit. So we can see that the lawsuit is about an antitrust lawsuit against Disney, Fox, and Warner Bros. So this is a big lawsuit, and they have a great attorney. We'll talk about that in a second. So they're going against alleging their sports streaming joint venture, informally known as Spulo, and why they're anti-competitive. Fubo has called the JV joint venture a sports cartel and has loudly complained that the three media companies in bundling linear sports channels in a service expected to cost around $50 a month. They're deploying bundling schemes. They've resisted offering their pay TV partners for decades. So I have a bunch of notes we're going to go through. So about the forced bundle channels, they're not letting Fubo only get the sports channels they want. They're forcing it with news and entertainment, and they have to pay for all of it. And in return, they have to charge their customers for all of it. And people can't just buy the one thing that they want, which is hurting some subscriber growth because they'll go somewhere else where they can get only that. So they're forced to pay outrageous licensing fees, 30 to 50% above market price. So they're paying 30 to 50% what other companies are paying and what they are supposed to pay, the market value, which is hurting their net margins, it's hurting their profits. So if they do win the lawsuit, which is very possible, their financials will go way up. And besides the lawsuit, without the lawsuit, their plans are to go profitable in 2025, which is soon. And if they win this lawsuit before that, they will become profitable a lot faster and will be a lot healthier company. So Fubo can't get content that they want. They can't get ESPN, national ABC, and other things without a bundle that they want. They have restrictions on content, and they can't get certain content as well, which is very anti-competitive. And all these big companies can do charge customers for exactly what they want and steal those customers from Fubo. So they have restrictions on content and how to charge. They have to charge consumers more. So their consumer growth and their subscription growth is slowing down because the prices are more expensive than the competition. And even besides that, Fubo's subscribers are still growing. So again, if they win this lawsuit, it'll be huge. Because currently Hulu membership and average membership is $17.99 a month versus Fubo, which is around $32 a month. Huge difference. So the attorney, they hired an attorney that was also the attorney for Meta, AT&T, huge companies, and they won the lawsuits with those companies. So these guys know what they're doing, and they are expensive. So let's get into the goods and the bads of the lawsuit. Is because they're burning cash with this lawsuit. They're already not a profitable company, and this lawsuit will just dig them down, which is hurting. They only have, if you get into the financials right away, they only have 168 million in cash, and last quarter alone they burned through 56 million cash, which is down from the previous quarter, which is around 80 million. But then if you look at their financials, it's not looking very good at all. If you look at their balance sheet, about I think 54% of their assets are goodwill and 13% are intangible. So if we take a look at the assets, we take the total assets, 1.14 billion, we take away the goodwill and the intangible assets, they're only left with 368 million. And if you look at their liabilities, they have liabilities of 895 million, and they have current liabilities alone are 489 million. That's huge. That's not a very good thing at all, and that's why they're forcing them to dilute the shareholders. So these guys are issuing more and more shares to raise money so they can keep running the company, keep growing. And look at this. This is quarterly issuing of shares. Since 2019, they went from 24,000 shares to 300,000 shares. This is diluting the shareholders, hurting everybody, and nobody's happy with it. So that's a very bad thing about the company that you need to consider, that they are not financially stable. If you look at who holds the company, insider ownership on Stock and Lock, they have a score of 2.39. The insiders own, I believe, 4.5%, and institutions own 37%. And lately, these guys are just issuing grants, exercising grants. But besides that, the CFO has been selling shares, and a lot of the shares. So the CFO is, and this was in the third month, April, January, February, March. So in March of 2024. So this is recent, and the CFO has been selling shares. Other than that, the big institutions have not been buying or selling much stocks since this year, really. So let's get into, what else can we get into? We can look a little bit in their financials and how they've been growing, which they have. So they have 1.5 million subscribers in North America alone. We can see that over here as well. 397,000 in the rest of the world. And all these revenues are growing, mainly focused in North America. And their revenue grew to 394 million, representing 24% year over year. Revenue growth over 25% year over year, and advertising growth over 21% year over year. Now, if you go on finance, we can find this article that shows us why the advertising growth will go up and keep rising, and why advertising companies love Fubo. Is because if you look at this chart, we can see the attention span for ads comparing Fubo to the cable TV and other platforms. Fubo is attention rate is 61% compared to others, which are 50 and 40%. So advertising companies know this and will look into making more deals with Fubo. So viewers aged 25 to 45 are at least 23% more likely to be in the room for Fubo programming rather than other categories and other things to watch. Fubo captured 33% more attention than cable and 70% more attention than typical MVPD norms. That is huge. So that is why I believe that advertising will grow, and that there's a lot of people that really love sports and keep watching sports, and they will go with Fubo. And this lawsuit could help them dramatically. But even without the lawsuit, even if they don't win the lawsuit, they could still their plan is to become profitable in 2025, which is, I believe, is very likely. And so this is a great company either way. And if you look at it, they're only selling for 500 million market cap when the annual revenue is 1.37 billion, and they're looking to have 1.6 billion by year end 2024. So this is a great chart. They went from 2020, they were 200 million in revenue to 1.3 billion in revenue. It's a huge rise. And if you look at their earnings, they are not positive, but they have been trying to become more and more profitable every quarter, and we can see it somewhat. 56 million in cash burn, which is the bad thing. They only have 160 million in cash, or 170 million in cash. They will have to continue diluting shareholders, which you will lose value. But either way, at 430 million, 500 million, I think this company is a steal, and I am looking into nibbling around with Fubo and opening up a position. So if we look at some other things, we can see the revenues growing Q1 24 or year over year up 24%, operating expenses up 15%, but the net loss went from 83 million to 56 million. Margins are getting better. The adjusted EBITDA is getting better. Adjusted EBITDA margin is getting better, showing us that they're on the right path to becoming profitable. Subscribers are growing, revenue is growing. Just good things that we like to see. What else do we have to talk about? Oh, right. So they have some other things coming up, which is the Fubo free tier. So at the beginning, I believe they'll only let the previous subscribers and people whose trial runs out get a free tier, so they can still watch certain channels on Fubo, which is very nice for ad revenue because they won't have the revenues coming from subscribers. But at least if they weren't going to be subscribers before, they still might watch, and Fubo will still get some revenue from ads. All right, so we can see this. This is a nice graph representing that they're showing us they're on the path to becoming more profitable. Looking at their expenses from Q1 23 to Q1 24, it is down a little bit, almost 10%. And the main expense from these guys is the subscriber related expenses, so paying for the channels. And if they are paying 30 to 50% more than other companies, even at 30%, this graph will go way down and they'll become profitable over a quarter or two, which is a huge catalyst for the company. And why I'm really, when people say this is a win-win lawsuit, there's a huge loss because they're going to burn way more cash paying the lawyers, paying the attorneys, showing up in court and paying and wasting so much time and energy towards this, which is the right thing to do because the upside is huge. I'm just really hoping it works out, and I believe it can. And if you look at this, this is just an interesting chart. Doesn't mean anything, but the last week, Fubo has been looking a lot like GameStop, which is funny because GameStop, the people that buy GameStop is the little guys fighting the big guys, the big corporations and institutions. And Fubo is kind of doing the same thing and showing that they are up against the big guys who have a monopoly in the market and are setting restrictions and not letting small players enter the market and not letting them have any profit in the market, really. If you look at this is from if you just started watching the video, there's a couple good videos about Fubo on YouTube. Jeremy, I know you guys know Jeremy Makes Money or something like that channel. He has some good videos on it. And there's another video, if you look at the lawsuit, I will mention a link below. He is an actual attorney and he has a 20-minute video, I believe, about the lawsuit, which goes a lot more in depth on what they're actually suing them for and what the plan is. And the video was 4 months ago. And if you look at the share price 4 months ago, it is down. And he was bullish on the company then. I believe he's still bullish now. The company is down bad. So down 50% from all-time highs. Okay, we'll ignore those all-time highs, but like, where could Fubo go? That is a great question. Right now, it's sitting at 140%. So if you look at some technical analysis, I believe it could go back down in the near short term. And I hope to open a decent position around 127, 120 to 130. And I will start nibbling around within a week. If we look at our side, is a little up. But these guys, I could see them this year even be going to $2, $3, which is a nice. And if you hold this for long term, I believe this is a great long term hold because streaming is a growing industry. Fubo is a growing company looking to become profitable. And they're priced as some, like, I don't want to say the wrong word, but as a bad company, an unprofitable company with no growing stats, where they're being priced as right now. If you look at some of the statistics, they're being priced at 0.29 of sales. They're looking to have 1.6 billion this year, and the market cap is 400 million. I believe they're hugely undervalued, but not for bad reasons. They're not financially healthy, not in a good place. Their growth is in a great place. They're growing nicely, but they just don't have the cash to not dilute shareholders and raise debt, which is one bad thing that like makes the price be where it is right now. But even with that, I believe this is a great company. You can pause the video and read through this, but I mentioned, I guess, the Fubo free tier is right here mentioned. So right, it will be initially available only to former subscribers and free trial users who do not convert. They will get the Fubo free tier feature. And what will they have? They will have some select UEFA games, which is soccer games. And then if you look at the guidance, so their guidance is to have around 1.6 million subscribers, which is up 100,000 subscribers, 4%. Very nice. All right, growth. And again, if this is without the lawsuit, this is if nothing happens with the lawsuit, which is the big catalyst right here for Fubo, and which is why I'm really interested about the company. The rest of the world growth is very slow, 2%, mostly just North America. And I believe they will mention here the goal is to become profitable by 2025. Conclusion, Fubo team remains focused on the core business as well as making progress against strategic priorities. We are balancing our profitability targets and growth while also advancing our technology capabilities. So they're still trying to grow in double digits while becoming more and more profitable, because when companies focus on growth, they usually go more in depth and do not become profitable in return for getting more and more subscribers and growing their revenue. Fubo has consistently met or exceeded guidance expectations. That's something we'd like to hear. Let's take a look if this is true. And yes, it is. Boom. They meet their guidance estimates for the last 3 quarters. Next earnings report is August 2nd. And again, the court date is, I believe, August 8th or August 7th. So that's going to be a big day for a big month for Fubo. We remain confident in our ability to build on this success while aggressively working to establish more fair and equitable playing field for Fubo, other media industry participants, and above all, customers. Let me know what you think about Fubo and what are the other stocks you want me to talk about, because I do have a good one actually set up that I'm going to be probably recording today. But yeah, let me think what you know about, what do you think about Fubo? We can see some of the analyst predictions. By 2026, their average revenue will be around 2 billion. And their earnings per share, let's see what they think. So 2025, they still see them as negative, but that's not going to happen. I believe Fubo will be profitable in 2025. And if you look at, they projected them to be profitable in 2026, which is, again, not the end of the world. What are the analysts saying? Mostly buy, 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 buy. We got a couple of 5 holds and 1 sell. But yeah, let me know what I'm missing and what videos you want next. Stock-based compensation, low. And if you look at the profit margins, the return on equity, return on assets, it's not looking good right now. And I don't think this next quarter will be, I don't believe the next quarter will be very positive. Since the lawsuit, they're losing more money. And I believe they could go down after the next quarter unless they have some crazy revenue growth. That's their only hope, really. So yeah, let me know what you think about the company and what companies you guys are invested in, so I can get on that. Are you dividend investors? Are you growth investors? Do you guys like to find these small cap stocks that have high potential of growth? Because I know I do. Thanks for watching, guys. Catch you in another video.